treating it like a threat. And one of the things that can't be attacked is your self-custody Bitcoin. And one of the things that can be attacked is the ETF. You can't be exposed to that. That's my view. It's not a good idea. And by the way, that'll hit MSTR too. It'll probably hit other stuff as well.
Friends and enemies, welcome back. Canadian Bitcoiners Podcast.
Friends and enemies, welcome to the CBP. Wanna be better informed? Listen to Len and Joey. Sponsors taken care of right off the top. Bull, Bitcoin, and easy DNS. The media is feeding the slop. It doesn't matter what topics discussed. Quality entertainment and information you can trust.
That's being planned or at least discussed. You know, we're not going to allow
quality entertainment and information you can trust. Send the guy some value, boost them with some stats. Bitcoin is a scarcity asset. I mean, it's just a fact. Geopolitical, national, down to the local cloud.
Friends and enemies, welcome back. The CBP. Thanks again to D's Laughs for that intro. Outstanding stuff. My name's Joey, here with a man who shares my name and many of my viewpoints tonight. Joseph Barbuto is here. He's been on the show before. You may know him as the Economic Longwave on Twitter. We are in an interesting time here in Canada and across much of the world. That you're seeing many of the same things, many of the same themes playing out. And we're going to talk about all that. We were just talking before the show about how it may seem kind of doomer, but the thing about the long wave is that it really is a cycle that's always considering what opportunities will arise after the downfall of the current market, economic, social structure. And I think, it's hard to debate that we're in somewhat of a fourth turning now, if we're not coming up on one. And we're going to cover all that this evening with Joe. First, though, the sponsors. EasyDNS, the best place for you to host a website. Mark is the friendly neighborhood registrar, as we always say. Been a friend of the show for a long time. And we recommend using him if you're going to start a business, start a website, host some content, whatever. He'll never take it down, which is huge these days. But on top of that, there's some other good stuff going on there. Between EasyMail and DomainSure, two additional services you can grab from Mark on the cheap, of course. Protecting your email list, your client list, your domain from being spoofed. All these things you hear about, especially now with the Coinbase spoofing going on. And God, there's probably a million other examples that I'm not mentioning here that we talk about every week on the Access of Easy podcast for EasyDNS. You want this stuff if you're going to be hosting a website or hosting any content. It's dangerous out there, and it's not just you that's at risk. It's the people who are trusting you to provide them content or to get a newsletter or whatever. This stuff is critical. But if you're a Bitcoiner, you have access to a lot of other cool tools. Virtual private server suite gives you an opportunity to run an OSTA relay, Bitcoin node, BTC pay server, you name it, he's got it there. Mark takes Bitcoin for his services. I don't know why you'd want to spend it on a day like today. I think we're cruising to 110 here or something. I haven't looked at the price in a while. Busy with my little one. But head over there. Start your stuff today. CBP Media is the code. 50% off your first round of buys, which you can't beat. Not many places giving you 50% off. Unless you buy past due bread or something off that rickety cart at the grocery store. Second sponsor, Bull Bitcoin. These guys are the best place in the world to buy and use Bitcoin. If you're not buying now, I don't know when you're going to buy, but you're going to wind up getting Bitcoin at some price in the future. Maybe it'll be 120, 150, 200 USD. I have no idea. But if you're not buying now, you're going to be buying in the future. So you may as well start. And there's no better place to go than Bull. Why? Private by default, okay? No need to have sleepless nights over rug pulls and shotgun KYC and all these things that you have with custodial platforms. Bull Bitcoin, non-custodial, obviously. Since day one, you have to have a wallet to send to. And there's nothing better than knowing that your Bitcoin is protected by private keys you control, as opposed to other exchanges and services that might say, hey, if you want your Bitcoin, we got to get your updated picture of your ID. We got to get your address. We got to get this. We got to get that. This coming. The clamps are coming down. But Bull is resilient and has resisted these things to date. Not to mention that if you want to use your Bitcoin, you can do it there. How can you do it? You can buy gift cards. Yeah, that's okay. A lot of people sell gift cards. I will grant you that. But how many people let you pay your mortgage payment on their platform, on their Bitcoin platform? None that I know of. How many people let you pay your cell phone bill, university tuition, if you're roped into that scam still? None. Just these guys. Go over, use the code CBP. You get 25% off all the fees for life if you use a promo code to sign up, our promo code to sign up, which is they used to give $20 or $21. This is a lot better, I think. You're going to enjoy that service if you haven't used it already. Coming to us live from warmer geographies, Joseph Barbuto is here. Buddy, first of all, it's good to see you. Second of all, disappointing. We were chatting before the show. Disappointing to see that it looks to me as though you've got a little bit of color. You're wearing a short sleeve shirt. There's a gratuitous number of buttons undone at the top. And I am here in a hoodie in the basement. It's fucking freezing over here in Canada. Rainy day. What's going on, man? Good to see you.
Hey, thanks for inviting me back. Yeah, I kind of lucky. I think I've told the story. I don't hide my personal challenges and whatever, but I got married and realized that my wife, I had to get her deleveraged and make some big changes, and it finally occurred. And she was offered just an educational role in Florida, and we're here for, we don't know yet, 6 months, a year, could be longer. So yeah, lucky. And I'm in this card room in our apartment. So, I know, Joe, you're concerned. Did you buy something? No debt. We're actually in a place, I'm a big picture guy. And she said, well, what if we buy a place here? And I said, well, I looked at the real estate and it just peaked. I'm actually in Tampa, Florida. So I'm watching the real estate market, and the US market's never been as expensive. So no, we're not buying anything. We don't plan to, because I believe there's the U.S. real estate market's probably peaking now, or will be, or within the next 6 months to the year at max.
I am still jealous, regardless of your rental versus mortgage position. Like I said, okay, and we're chatting before the show. Maybe we'll start with this, okay? The real estate thing right now, Joe, is hot topic in Bitcoin world, in real estate world. It's really a hot topic everywhere for a number of reasons. When I think about it on the Bitcoin side, you may agree with this, I don't know. A lot of Bitcoiners, even guys younger than me, guys who are just coming into family formation years, guys who are 25, 30 years old, they're talking about not buying a home to live in and put down roots in because they think it's just not going to outperform Bitcoin. I think, your position would be, this is not the time to take on leverage, given where we are in the Longwave and broader economic cycle. There's many other better ways to spend your money, as opposed to putting it into something you think is going to build equity that might not be the vehicle it was 15 or 20 years ago. Do these guys both have it right? Like, are we really at the time now where new families, are things so bad, or are they going to get so bad on the horizon that new families who want to put down roots have to at least consider that the damage they'll be doing to their economic situation long-term outweighs the benefits of the stability of home ownership?
Oh yeah. See, that's a tough question. It's a great question because, I have a model, and that model is general information, so it can give you some guidance, right? And I used to be a financial planner for 23 years, and financial planners, I always tell people you should have a financial planner because everybody's circumstance is different, right? It's you could be the same age, but have different cash flow, income, debts. You could be purchasing a home in Calgary versus Toronto. So what I try to do is give people general information to help them make a better decision, right? And including advisors. Most of my clients on Substack are advisors, or they work in the financial industry, and they're looking for an unbiased model. And they know my background is that I came from loss, and I started the investment business the same year in '89. So I witnessed that period. And what I learned from that was that I'm never going to lose money again, and I'm going to be the best advisor possible. And then I fell into this thing about the Longwave. What I'm trying to suggest here is that this cycle, real estate cycle, is this deleveraging is going to be very long, and I believe it's going to last at least until the end of this decade. Now, if you look at the numbers, even the Great Toronto Bust in the 90s, people were still buying, and there was no negative or deleveraging by Canadians. Actually, Canadians did deleverage in early '81, a slight amount. If you look at the credit growth, it was the only time since the 30s year over year credit growth went negative. That was '81 for a short time. Interest rates skyrocketed, and it just priced everybody out of the market. But in the 90s, there was still real estate activity, but people were buying at lower prices. But I'll tell you, after the collapse, there was no interest in real estate as an investment. It was simply as a home. And I recall, purchasing a home near the bottom. I knew that the worst was behind us, and it took a couple more years before it actually, in real terms, bottomed. But it went sideways until 2002. And then real estate took on in life, and I think that was the millennials coming in. So that's a tough question to answer for a person, because one person, it could make sense. And that's why is to take the information of what I give and other people who would look at real estate from a secular perspective and their own with their financial planner. I've been trying to warn people, and as many people as possible, walking into real estate. And I'm a Torontonian. I always be a Toronto. I love this city. Well, I'm not there anymore, but I love Toronto.
Yeah.
And it's tough because I remember growing up as a kid, the excitement and the opportunity in the 70s when we had stable governments, low private debt, reasonable home prices. The opportunities were amazing. And there was just great real economic growth. And now it's just, as we know, the real GDP per capita has gone sideways for 10 years under the Liberal government, and we have a Ponzi bubble. Without that bubble, there would be no economic growth. So people have never complained about the Liberals because there wasn't economic damage. As we know, in the 90s, even the NDP were kicked out of power because once a downturn severe enough, I don't care who you are, you'll be kicked out of power. So, and we're not even there yet.
I'm surprised
we haven't
by that,
even had a financial crisis yet.
Yeah.
And that's still in the future. So I'm saying, and this is what I'll say, look, work with a financial advisor and listen to other people who are unbiased, who don't work in the industry, because they're going to give you biased information. I'm saying that we have a financial crisis in front of us, which we're going to have a banking crisis, and we're going to have a sovereign debt crisis. Now, the banking crisis means liquidity will shrink and it'd be harder to get loans. And the sovereign debt crisis, in simplicity, means that interest rates are going to skyrocket. What does that do to people refinancing? I mean, that will be the final nail on the coffin for real estate. And if you look at the demographics for the baby boomers, everybody always talks about immigration. But I keep saying, look, the baby boomers are now coming to a point where they're going to be putting a huge supply over the next 25 years to the market. And as Japan experienced, this is why Harry Dent, who called the Japanese real estate bubble, he was looking for a revival in 96, but it didn't bottom until 2012. And then it was obvious to the demographer, it was the huge amount of supply because their debts were just overwhelming the new buyers, right? Now, what's interesting, since 2012, the population's been, I think, shrinking, yet real estate prices have been going up. So it just kills the whole theory about immigration and population. And I did the work and I said, there's no connection. There's no connection between population growth and real estate prices. None. It's affordability. And the reason you had this huge supply, the demand coming in, but real estate prices, I attached a chart to this podcast, on Twitter, is we're having another really bad month, right? Last month. And the reason is the supply is coming on because of speculators and the fear of the market. So what happens? People say, oh, supply and demand are equal. They're never equal because you cannot look at demographics. You have to look at what was driving real estate. And yeah, that's I just updated before we went on air. And you can see that was a really bad month in April. Look at the negative numbers. Look at that. Now look at this. Look at the trend lines, right?
Yeah.
There you have the secular rise from 91, and notice now that trend, that green line
you're breaking it
now is resistance, as we call it.
Yeah.
And we're still in a bear market. Now, for new people, I write Kondratov's monetary wave. That's 40 years from 81 to 21. What that was the fall in interest rates that allowed people to leave her. Because at 18% mortgage versus a 2% mortgage, how much leverage can you take? You could take a lot more than 2%. So we didn't have real incomes rise, but how did prices rise? It was the leverage. And because of record low interest rates. Like, look, I've never denied, it surprised all of us, 2022, we had a blow off. I never thought during the COVID that we would have a blow off in real estate prices, but it makes sense after the fact. We thought it was over in 2017, even though the cycle pointed to 2022 to 2024 coming to an end. And when we had that blow off, and then you do an Elliott wave, it was like, okay, now it's over, but maybe they can extend it. We were shocked. All of us who've been following a bubble, people who study bubbles know when it's happening and it's occurring, but you never know exactly. And we know when it ends, especially a real estate bubble, it's never the stock market bubbles that hurt the economy. It's real estate bubbles because the leverage in the financial system and the banking system that causes the crisis. We're not there yet. And that's important for the audience and those young listeners to take into account. And it's inevitable.
That's a very good answer. I'm curious, one of the things I see now from policymakers, Carney's new liberal government, new in air quotes, obviously liberal government, talking about the affordability of homes, the cost of homes. And I'm with you that the thing that people should be looking at is whether or not a huge chunk of the population is getting destroyed on their mortgage refis specifically. And you're in that era now. If you locked in sub 2, sub 1.5 in 20 or 21, you're coming due now at what is still nominally, and certainly long-term, a low rate, but 4x what you signed up for a few years ago. And so, if you have a mortgage, generally what you see, I'm careful to use that word generally, obviously, but generally what you see is as your terms roll over, your mortgage payments decrease, both because there is or has been anyway a downward bias in rates, and because more of your principal is off the loan. And so you combine these two things, and life is supposed to get a little easier for you as you age into the home you've purchased. But these buyers are going to have a difficult time on the interest side and on the wage side, like you mentioned. And so it's a double whammy. You're getting pressure from both directions. And I'm curious about maybe some of your thoughts on what the government has said about affordability, specifically that homes need to become more affordable, but not less valuable. This is obviously doublespeak. And in my mind, it really only leaves one option, Joe, and that's that wages have to go up to keep up with the cost of homes. This is not doable without government interference, I don't think. Do you have a view on this? What are these guys talking about? And what do you think the likely sort of policy outcome is, if that's really the goal?
Well, obviously, we know they're going to try everything to prevent deleveraging, without a doubt. Mm-hmm. So that's a given. But if you do the math for Toronto and Vancouver, it would take 40 years for wages to catch up and to bring prices to nominal 2 to 3 times income historically. I can say, well, Joseph, do you really think it's going to go 2 to 3 times income? Maybe 4 or 5, because women are part of the household and income. One of the things when I was teaching myself about real estate, right? Because I'm just curious, right? I didn't plan to be a forecaster at all. I'm just curious and want to know what happened. And when I looked at the real estate cycle, and I was like, oh my God, I didn't know this. And for the audience, long-term mortgages didn't exist until the 30s, 1930s, almost 100 years ago. So if you got to think, homes were 1 or 2 times income. And that was what it's just, and there was just the male of the home was supporting real estate. But women didn't come on. I think it wasn't even legal for women to be on a mortgage until the 70s. And
really?
If you look at, that was surprising. So, because I'm trying, well, how come prices went up? And everybody has all the reasons, but it was always affordability. Because you have to ask yourself the question, why did real estate prices go up in the 70s when interest rates were rising? Here's the thing I keep talking about people who push the real estate narrative. From 1945, that was the start of spring from the Longwave. Yeah. And interest rates started to rise because Canadians and Americans, Europeans delevered. So we started with a fresh plate, high savings rate, and asset prices at low levels. So from 45 until 81, that's spring and summer from the Longwave. And I'll briefly go over that very quickly. What are the seasons of the conjunctive cycle? Interest rates were rising, so were real estate prices. So this whole argument that interest rates, are not good for real estate, it doesn't meet the sniff test, so to speak, right? Like, why did real estate prices go up in tandem with rising interest rates? And the reason for it, because first of all, you started from a low level. but incomes were rising faster than inflation. So real incomes were rising to keep up with the rise in prices. And then governments expanded mortgages. Like banks couldn't even lend to the real estate market until 1954. So, and the leverage was only, I think the gross debt service ratio was only 25%, and now it's 34. So you had leverage upon leverage upon leverage. Then incomes started stalling in the mid 70s in Canada. And then we had that healthy correction. So prices up until 1984. And my parents actually were not market timers, but they were fantastic market timers because they bought in 64 and 84. And they were both secular bottoms. And 84 was the last time you could buy a home in Toronto for about 3 times income. And after that, people know that real estate went through its first boom. And I was unlucky. I bought in 89 and it tripled in that 5 years. Why? Because we had the collapse in rates. And people look at cash flow. So they don't look at the price of the home and say, oh, I can carry a $200,000 mortgage instead of a $50,000 mortgage. So we had this rise. So we're at a point now. Why is all this supply coming on board?
Yeah.
Right? How's the government going to stop social mood? And the thing is, they can't. Because Japan tried. And listen, Japan had the tools to stop it, and they were unsuccessful. And they had an expansive global economy. So when their economy turned down, they had the real estate collapse in the 90s. The government did everything. They bailed out the banks. They bailed out the economy. They used their savings. They did fiscal spending. They did everything. And prices fell for 21 years because it's a psychology. And that's why the Longwave it's really a social mood. And we think in each part of the cycle or each season differently. And during the monetary wave where things are deregulated, the financial, we think, hey, real estate's a great investment. Well, if you ask anybody, nobody thought real estate was a great investment until the 70s. It just was a place to live in and went up in value and so forth. So would they try? Yes. Would they be successful? Absolutely not. And they cannot say what I say or anybody else that's bearish, that real estate prices will correct because they know it will impact the economy. And what's the most devastating thing you can do to your own economy? Lever the private sector, the public into real estate. It's the worst thing you can do for the economy. There's numerous books and papers and so forth. It's the worst thing you can do. So they know that once that crisis occurs, they're in trouble. And I believe this is the last of the liberal time. No matter what they do, they will be, I think it's the end of the Liberal Party re-electing Carney. I mean, they were already out. This just guarantees it because the key is you learn about the cycles is you can take advantage of it, right? If I wanted to be a leader, I would have abstained from this current business cycle. I would look at the next cycle. So will they try? Yes. Will they be successful? Absolutely not.
It's fun the Longwave thing is fun to talk about. When I first met you a few years back, I had no idea about the Longwave. I had not given much thought to monetary cycles. I was kind of if you've seen the mid curve, bell curve meme, I was on the left side, like things go up, things go down. And then there's the middle of it where you're talking about rates and governments and blah, blah, blah. And then I think maybe this is the far right-hand side, like the true Jedi genius side of the cycle theory, this Longwave thing, that it takes a long time, but it's inevitable. Things go up, things go down. And so maybe we could talk a bit about the Longwave theory just as a interlude here. The seasonality of the Longwave theory is fun. I think Canada is in, maybe late fall, early winter, if I had to guess, where you come down on that. Tell people about this, Longwave seasonality and why it's important. And maybe specifically, how do you know that Canada is in fall or winter as opposed to spring or summer? There's a number of indicators, obviously, you can touch on. I'd be curious to hear a few of the big ones that, are really dead giveaways, sirens for you in that regard.
Yeah, that's a great question. And I'll tell you, I'm working on that. I'm going to kind of switch here. I've had to take a time to help my wife and so forth. I kind of laid back from the Longwave and I've been much less active, but now I'll be in a couple of weeks fully active again and focusing. And I'm writing a book, and thank God for AI. It's doing wonders. And what I mean is I realize it's so complex. But with AI, what I'm doing is I got this vast, I don't know if you know what Evernote is. I have this vast Bible of stuff. It's all in my Evernote. And I take it and I throw it into AI and I said, rewrite this. If you know how to use it, rewrite in a way so the simple person can understand it.
That's great.
But first, write it to me so a professional can understand this. So I check it because it's my work. I never rely on AI unless I'm looking for data. And it's written some phenomenal stuff. And I said, how do I make it simpler? Because Joe and I, when we do our spaces,
this is Joe
make it
Rampart for people who don't know. That, you know, people who listen to the show will only catch the back end. We stream a little bit of an overlap with you guys, but I always try and catch that Rampart space. It's always pretty good. You take a lot of shit on that space, I think, unfairly sometimes, but you're very patient with the crowd.
It's okay. You know what? It comes with the territory, right?
Sure.
You know, but listen. Here's the thing is, and I'm going to be just in defense. One of the things that I learned in 2008, when I was still actively managing money, is if you're wrong, you need to admit and deal with it, but not have your portfolio. So I saw the 2008 crisis, but let me tell you, I still made a mistake because my models told me to cut my gold exposure, and I didn't do it. And because I thought that was going to be the big deleveraging. And the answer was so obvious. Gold was on a fixed standard in the 30s. It's free now, right? It's to float like everything else.
Yeah.
And so of course it didn't act. And lucky it did recover. And I've been a part of the gold market. I've always said, my worst investment was buying real estate in 89. The best investment was being gold in 99. Absolute bottom. And I learned from my mentors. The seasonal guy, Richard Russell from Dow Theory, the old guys will know who he is. And he was an absolute great mentor. And like him, I would say, I'm going to be like you one day and whatever. And he would say, thank you, Joe. And thank for subscribing. And he's just a great guy. And so I'm trying to do the same thing. Even though I'm much younger, I still have a lot in my future. And I want to be part of this because it's fun. Now, the Longwave, to simplify it. I fell into it as I was trying to understand the market. I'm just curious. I kept reading more. And I fell onto this Longwave forum in the 90s. And it blew me away. I was very complicated and combative. So listen, even on a Longwave forum, people were fighting, you know. And I'm like, what's going on here, guys? Let's just learn from each other, because there were hedge fund managers, mutual fund managers, academia, investors, the average person. And I met some brilliant people. Michael Alexander, who wrote the Kondratev Cycle. It's a very dense, thick, technological, heavy book. And it's one of those gems that very few people read. And I realized there were so many interpretations, and how could I make it simple? So the long wave is not, Kondratev never said it was a fixed cycle. It averages 55, 60 years. It's not like the Seculum or the fourth turning. It's an 86-year cycle. Even Martin Armstrong, he discovered that 86-year cycle. The long wave focuses on what drives the capitalist system. And it's always innovation that has these great waves, and it ends with too much debt, and there's a deleveraging, and then the cycle starts. So you can see that there's been these technological advances. And the fifth wave, which we've been building since the 90s, is decentralized, and it started with the internet. This technology, the internet, smartphones. I mean, I had computers, it cost me, it was $12,000, and I think I had more RAM on this computer compared to the whole thing, what I used to carry then. And I can't believe people complain about the price. I go, look what I can get for $2,000, man. Like, I had a car phone. It's $2,000, $400 to install it, and it was $2 a minute. And now I got this thing that I can take the best pictures in the world. It's like, what? It's only $1,000? So that's how I see things, right? So technology drives it, too much debt, and a deleveraging ends it. Now, there's 4 seasons. So spring starts when the deleveraging is done. And so spring, in all intents and purposes, we can argue, but it started in 1945, and we started on a clean slate, and you can see the records, and the deleveraging was done, and people start to lever again. And what was driving this, of course, was mass production, centralization, automobiles, cheap gas, and all these technologies. And then we saw it move into aircrafts and so forth. And it was centralized. The government became more powerful. But that really started in the 30s when the government stepped in, the New Deal, and they started with central banks, taxation. And so this is why we know what's come to an end. Now, from spring was from 1946 until about 1967. It's about 21 years. And during that time, the economy starts to overheat, and we have summer. And summer, we have high inflation. It's real demand, over demand, and production isn't able. So from 67 to 81 is when we had the peak in interest rates. Mm-hmm. And we had the highest real inflation coming from demand, right? It was all these baby boomers buying a home, buying vehicles, entering the workforce. They were just changing, and this was global. And naturally, there was going to be gas shortages and doom and gloom that we're going to run out of oil and we're going to have 1 billion people starve. And as we all know, the opposite happened. The negative people were wrong. The third season is when we make the mistake and we start to financialize the economy. And so finance is usually, so the fire industry, finance is usually small compared to the real economy. It's supposed to serve the real economy, which is driving demand. But finance takes a life of its own. Banks weren't even in the investment business when I started. They were small players in mortgages. I mean, now they're huge in ETFs and so forth. Now, the reason why the finance takes over is the deregulation, and we can take on more debt. And if you look at technologies, how can we forecast that technology is going to change our world? And it's opposite real estate prices. It's something like this, where it gets cheaper and better every year. And as it becomes cheaper, the adoption rates increases, right? It's just very simple math. So if you look at all technology, even oil was very expensive, and it got cheaper and cheaper and cheaper. So it allowed more and more people to consume the product and services. So a real growth industry is driven by an increase in adoption rate coming from lower and lower prices. This applies to finance. Mm-hmm. What is the primary business of a bank? Credit. Its product, credit, fell in price for 40 years. So it allowed them to pyramid and get Canadians, Americans, Europeans to take on more leverage.
You're talking about interest rates there when you say the
interest
price
rates,
of
yes.
Yeah.
Their price of credit, which is interest rates. So now that cycle is over. And if you notice, not only real estate prices peak, but if you look at the banking index, it hasn't gone any higher since 2021, and it's underperforming the market. So it's given us a sign. Now, we're not there. Listen, I preface everything. If I'm still early, but the models will switch. And when I went live 2 years ago, the models were 50% cash. I can divulge that. So I had to have a vehicle where people get consistent advice. I can't give advice here or whatever. So you want a model, and a lot of financial advisors, individuals subscribe to it. And the model, ever since then, still 50% cash. What drives it? Valuations. The market is super expensive, but we're still participating in gold and the market. And those could change. When I met you guys, he said, Joseph, can you build one? I don't want to be buy and hold. Could you build one for a Bitcoin? I said, sure, I'll put 5%. And wouldn't you know, I got the bottom of the cycle. That was lucky, right? Of that cycle. And I've been being cautious since. This is people who just want to know where, because nothing goes straight up, right? Or nothing goes straight down. So I can tell them where if you're planning to accumulate more Bitcoin, where you can in the cycle. Now, autumn is a buildup of too much debt, a peak in the financialization of the economy, and a focus away from what drives real economic growth. Economic winter, which we have not entered in Canada.
You don't think we've entered it yet? Okay.
No,
interesting.
No, definitely not. And I said, this is a Longwave perspective, right? Longwave, I know Martin Armstrong's cycle. I subscribe to his service. I know the real estate cycle. I know the business cycle. So I follow, I know the fourth turning. I'm fascinated by those. And I incorporate them because I can take bits and pieces. But it's very different from Martin. Martin gets into geopolitical. We do know that there's war is part of it, revolutions, because the old system doesn't work and we're building the new one underneath. And so economic winter is a generational shift from the financialization, which shrinks dramatically. And then what powers growth is the new technology. And as we know, Bitcoin is part of that decentralization. And we're seeing even the forces politically with Alberta and Canada and the United States and Europe, that we see that there could be a breakup of the countries, because if the centralization doesn't let go of the power and let the provinces or estates or countries in Europe, they will break apart. And it's a shift, and it's the old trying to hang on to power while the new emerges from strength, and that's technologically driven. Is that simple enough?
I think it is. I want to ask you about the point you made there, a good one, about the current system being sort of uprooted by a new system coming underneath it, and it just doesn't have the roots once that new system builds enough of a base underneath it to hang on, and it gets destroyed oftentimes in a sloppy, chaotic, occasionally bloody, event horizon of 10 years, 15 years, 20 years, whatever it is. The thing I'm curious about, and you mentioned this too, that the long wave is as much a social theory as it is an economic theory. Do you think it's a coincidence that these, near 100-year cycles basically coincide with what you can expect in terms of like the lifespan of an average person? I think about Canada specifically when it comes to the pressures between the provinces, the pressures on Ottawa, and the last cycle, Joe, the pressures between boomers and everybody else. The elbows up crowd. I didn't see a single kid talking about elbows up, and we had, I think, one of the highest turnouts for voter, in terms of voting of the last 15 or 20 years. And it seems like it was not along party lines, not necessarily along racial, ethnic, religious lines. Maybe you could even say it wasn't even along economic lines. I'm fairly well off. My neighbors are fairly well off, but I'm sure that we voted for different parties at the ballot box based on age. Are these things really the true pressures that people should be looking at when they think about economic cycles? And are they too clever by a half when, like you mentioned, they're too focused on the sort of minutia of day-to-day and month-to-month data and data that doesn't really matter, but it's these broader pressures and these broader cycles that really are impacting economics as opposed to, the monthly Fed speak or whatever's going on, in front of the cameras?
Yeah, it's a great question. It's always, I think this is just a desperate attempt to hang on to the past, because remember, or if you're not aware, I've always got to assume most people who are listening or watching this are not aware, but really Canada was built from the upwave, we would call it, which includes spring and summer. And that upwave was a young Canada, a resource-rich Canada, productivity, everything was just working right. So we brought in healthcare and universal healthcare. And of course we can make the promises, but creative destruction is the hallmark of capitalism. And we destroy the old because it doesn't work anymore. So, the public doesn't want to hear that we can't afford the healthcare system because of demographics. We don't have the economic growth, but there's something better coming. I mean, part of the decentralized renaissance is the stem cell revolution is going to be so inexpensive within a decade that people won't need healthcare or sick care, as they call it. So I think it's just an attempt. But the problem I have with the Liberal Party and Carney is this. This is controversial to some people. I bought into this whole climate change myself, and I met brilliant people about 15 years ago. And they said, Joseph, this thing is a fraud. And I said, what? What's going on? I said, look, here's a couple of books. I want you to read it. And then it was just a slap in the face. I said, oh my God, it's so obvious. And I didn't realize it was politically driven. But three climatologists in Canada may be aware of it. It was three Canadians. And I think I've posted on Twitter who really influenced my thinking. And once I read the book and I realized the agenda was, I think they know what's coming to an end. But there's two drivers. There's the climate change is being used to hold on to centralization.
Mm-hmm.
And the second one, I would say, is subversion by some countries to weaken the West, Canada, United States, and Europe. And I think Trump is aware of that. And so I think there's other people who are really good at fighting the battle, but I tell people why I've come to that conclusion. And then when you look at the data, and then it became so obvious. I mean, I didn't even think about CO2. I knew I had learned this in school, but it was so obvious. And I was like, oh, sorry. I just didn't take it serious. I wasn't paying attention. And I was like, CO2 is plant food. It makes sense. How's this pollution?
Yeah.
And then I realized the agenda, and it all made sense, and you can see. And so that's why I know for certain that that's going to be their downfall. And I've always said they're attempting the WAF to control power, whatever. It will collapse. There's no way the public is going to vote in poverty. And what did Carney promise? The cut in the carbon tax. I mean, I'm here in the States, and I'm like, why is it so cheap here to fill up the car? And I come from a country that's resource rich. It should be $1 a liter or 50 cents a liter. So,
and it was, by the way, not even 10 years ago, right?
Yeah,
there was a time.
It was. And I think the whole thing is that this is going to be the downfall of centralization. And economic winter will expose that, because people will never vote in. And they don't realize that they're being subverted by outside sources to accept a lower quality of life.
Part of the theory, the global warming one, I love talking about global warming on this show because YouTube slaps a fat tag on the video like I'm some kind of insane conspiracy theorist. Just YouTube. All you have to do is take the chart that you think is real and stretch it back another 20 years, and take the chart you think is real and look at the COVID gap. Do you know there's an entire section on, I think it's the US Geographic Service website, dedicated to why there was no change in CO2 emissions during the COVID shutdown. Like these guys know that people are looking at this stuff now and have questions, and they just don't have answers. That's one problem I have. But that aside, the other thing I wonder, and I'm curious about your thoughts on this since we're on the topic, when I think about the climate action and the sort of rah attitude of the climate extremists, one of the things I think about often is this a way to coax me into having a lower standard of living because they know a lower standard of living is going to come for most people anyways, and there's nothing they can do about it? They have to put a face on it that's not, like you said, an economic crisis or a deleveraging crisis or any of these things that will spook people. So instead, everyone thinks they're wearing the same jersey. They find a tribe in the CO2 reduction initiative, and these countries who, the ones you mentioned especially, on the tip of the spear when it comes to the need to correct, they're in for pain regardless. And so there's an effort to, put a face to this pain that's not incompetent governance or economic cycling or any of these things. Do you have an opinion on that?
Well, China's not doing this, and it's building 2 coal plants a week. They're going through economic winter.
Okay.
They have actual deflation, and they have a collapse in prices, and they're still powering ahead with technology. And this says, they're going to, the rules for China kicks in 10 years. I said, that's interesting. Why is that? Like, why isn't China? I think I've posted this. Canada could fall off the map tomorrow and have 0 emissions. China will make up the difference within a year. So, what is this delicious? Now, to the audience, I've said this, and you can go to my Twitter account. I said, renewable energy is a growth industry. Bubble in stocks, and we've had 2 solar bubbles. We just had called the peak in that, the renewable energy bubble that peaked 2 years ago, 3 years ago, and it's collapsed 70, 80%. I am not against solar, wind. And what's interesting, I'm here in Florida and I pay attention to things. I go, where's all the solar panels? It is sunny all the time here. And it makes sense that every roof should have solar panels. It doesn't. In Calgary, it's a different story. So the economics, I guess, are not there yet. And it's the economics that will drive it. Now, solar, wind, battery technology, EVs are becoming cheaper and better every year, without a doubt. There's so much innovation going on in solar. I think we all prefer if we could power our own homes and cars from our own solar and charge it and not be relying on the government. But that's not anytime near soon. So let renewable energy be disruptive on its own, like all other technology. We didn't have to force the public to switch to a cell phone and give up their home phone. It just became better and cheaper. And that will happen with those technologies. But I need to see in a wealthy country like the US, and I need to drive by and see here, and I look at that and I tell my wife, says, well, where's all the solar Oh, the odd one. No, it's no different in Toronto. So the economics aren't there. And when it is, it should be disruptive. So sure, but this carbon tax, it was the dumbest thing. I think that it's going to be the downfall. And I believe one of the solutions, which will come from the decentralized renaissance, will be to cut taxes dramatically on energy and cut the taxes of Canadians. Look at Trump. He's trying to do this. He understands because we don't have the fiscal or the interest rate room to stimulate the economy or the global economy. So what do? Focus on technology and then focus on cutting taxes dramatically.
Yeah, those two, sort of policy positions will increase productivity here, which is, according to our bank governor, assistant governor, whatever, an emergency. I think that's true. You mentioned Canadian wages have been stagnant for the better part of a decade, in terms of GDP per capita, where I think bottom of the OECD, something like that. Like truly, when you see these charts, we're near the bottom. Countries you've never heard of, where there's nothing but like small rodents and old castles, and these guys are outgrowing us and outproducing us. Sad state of affairs. And so maybe we can shift here to exactly how we know it's a sad state of affairs here. Looking at the economic long wave, one of the indicators that I have been talking about on this show, although I've not been saying it's a long wave indicator, it is this idea of stabilization, attempts at stabilization by government to stop deleveraging, as you mentioned, and I think also to control the flow of capital out of the country. If I look at the two political parties that were at the fore over the last election cycle, it was actually the Conservatives that had platforms that bothered me more than the Liberals in terms of capital controls. One big one was the TFSA expanding to $12,000 in contribution room for people who wanted to buy equities as long as you spent $5,000 of it, almost half, on Canadian equities, chosen and stamped as okay by the government. Huge no-no for me. And the second one, and you'll I'm sure have an opinion on this, we're going to make homes more affordable by cutting the GST on homes. That doesn't make anything more affordable. It just raises the home prices by 13%. And so, I'm curious, what else do you see that tells you Canada is truly in this fall? You said we're not in winter. Are we heading to winter? Like, what are we talking? Am I still wearing shorts once or twice a week, or am I getting my winter tires put on? Where are we here?
You should be preparing for the winter season, right? You're looking at probably getting ready to put on your, winter tires, definitely, because you'll know when you're in economic winter, and it'll be a banking crisis, right? And it's deleveraging. Interesting enough, after this time, I've never seen, but it was in the U.S. The U.S. real estate cycle peaked in 1925, but their banking crisis really didn't occur until the 1930s. And what caused the collapse? People miss this. It wasn't the stock market collapse. It was thousands of American banks going under and the real estate bubble that it caused most of the bank failures. It's always real estate and it's deleveraging.
So Joe, did they have a lot of exposure to that real estate market? They must have then, right? So that's interesting.
They did. I think somebody liked, I forgot I have a post. Somebody liked a post and I forgot I made this chart of foreclosures. And you just see it rose from 1925 until it peaked in 1933.
Really? So
you get banking. So banking crisis is the start. And I will say that one of the things people don't know is that's shocking to me because I've only been here 6 weeks, but I look at everything from a long way. So I can't believe how many banks there are. And it's just like gas stations in Canada. There's so many banks and they're so competitive. But what I found out is there's half as many. Half are gone or don't exist pre-2007. So if you look at when the U.S. had their crisis, we went like unscathed in Canada. Like it was nothing. It was like a little cut. And we took our bandage off and we bailed out the system. And we just continued leveraging, which was surprising to all of us. Yet the U.S. had a real estate bear market from 2006 to 2012. And if you bought in 2012, you've done very well. So that cycle now is speaking. So, but the sign will be, the start of it will be, and it hasn't happened. My radar is watching the banking stocks and watching the month to month, which I got today, the loan growth. Do we actually see Canadians stop borrowing? And that hasn't happened, I believe, because we haven't entered a recession. Once the recession hits, so it'll be a recession, banking crisis, and negative, for the first time, negative credit growth. And we have none of those. Those are three things you can watch on your own, and there'll be a sign. So the financial era is over. We have just a small hangover, and I'm sure a lot of people can tell you there's a lot of horror stories out there, but it hasn't impacted the economy or the banking sector yet. And that will be the sign, because what happens when you get the banking crisis, credit shrinks up and we get failures, and that naturally shrinks the economy. Then fear takes over, and then panic takes over, and then you see a huge supply from the speculators, this new group of people, probably under 50, who've never experienced a true real estate bear market.
Yeah.
And the psychology will change. So, at the end, there's other indicators. But in the book that I'm putting together is, which I'm trying to rush to have it ready for the fall, because I want it to be out before economic winter starts in earnest. And when that happens, what to look for and what you could do and so forth and so on.
The thing I'm curious about, and as a guy who has a background in financial advising, what do you think the impact is going to be of guys my age who have never even sniffed a recession, like you said, a true downturn, economic downturn, advising their clients? My understanding, and I've had some okay experiences with financial advisors over the years. My stance generally is, if a financial advisor will take my call, they're probably not a very good financial advisor. I tell everyone that. It's always by the dip. It's by the dip. It's when things are going well, it's because of the strategy. And when things are not going well, market conditions got the best of us and there's nothing we could do. It's all horseshit, in my opinion. It's stuff these guys say. What do you think the outcome in this and the sort of impact of having 80s born, 90s born advisors is going to be on the market? A lot of people would say that those people are accustomed to stuff like passive flows. They're accustomed to stuff like carrying more debt. They're not afraid to borrow into infinity because they just think everything's going to come back. To me, it sounds like that will make everything worse. I'm curious what you think.
100%. And that's the problem. You can't trust. I don't listen to very many mortgage experts, but I know one. I think there's one popular guy out there that went through it. And I said, look, I can't tell you who to talk to, but this is one time. I mean, this is what I love what I do, because time works in my favor, right? If I was doing a physical job at my age, it would become more difficult every year. But as long as, and I'm working hard to keep this thing active, I could be doing this like Warren Buffett and Charlie Munger. They're 100 and they're still doing it. And I know a lot of people, when you actually trust them more because their experience through bear and bull markets is really important. So the same thing I would say, find a mortgage broker, real estate broker, financial advisor. I know this sounds unfair to the young guys. Well, work with a guy that's experienced. And that's what I did. I went through my own experience. So I was naturally cautious in terms of advising people what to do. I didn't. I was terrified of asset bubbles. So, and I then went to learn from masters. But find somebody who's been through a bear market. And another thing that worries me, and you made a great point. When I went into a bank, and I was curious because I'm always asking questions. If you went to a bank to buy mutual funds, they say, "Oh, those are too risky. We don't sell those things." And now banks are major players. And I've gone with friends to the banks, and I'm shaking my head and says, "Oh my God, when this finally does end, it's going to be bad," because I know the cookie cutter models that they have. and the cookie cutter advice that they're giving the public is to ride out the bear market. And that what it tells me, and I've worked with clients through bear markets, so I know the psychology. And this is why I also learned and taught myself Elliott waves, because it's built on social cycles and fractals. It's a reflective of social mood that it will only exacerbate the panic. Mm-hmm. And governments think that they can stop the panic. No, if you want the whole thing is central banks, I thought, were supposed to prevent bubbles, not create them. And that's all they've done. So if you don't want to have economic winter, don't have economic fall. And we set everything up to have a vicious hangover. Now, it does not mean you have to go through it, right? Because one of the things why I started this too wasn't to just warn you, was what do you do, right? And one of the things when I studied last economic winter is I found out that Kennedy, the empire of the Kennedys and the family came because not what Joseph Kennedy did in the 20s, is what he did in the 1930s. He saw what was coming and he tripled his net worth and he became a dynasty. There were multimillionaires, I think even a billionaire, and they all were bankrupt in the 1930s. And they were like the stock market's going to come back. So you can do things. It's a great time to start a business. It's a great time to pick up assets. The key is to survive and prosper, as Harry Dent says. And I agree with that 100%. Look, you shake your head and, when you're older, you realize everybody's going through their own journey and they have to make their choices. You can inform the person. If they're open to it, great. If they're not, oh well. So I'm trying to help as many people as possible to get through economic winter, because once it does arrive, okay, what do we do? And I think this is where the strength of the Longwave is that, okay, let's redesign. Because let me give you some hope about Canada.
Sure.
We have the resources, we have the people, we have the technology. We just don't have the politics driving us in the right direction. Like Japan does not or never did have the resources. Russia has the resources, but not the an economy driven to create the wealth. So if you have all those, what's stopping Canada to go to the next level? And I think they will, but I think it'll be decentralized, is the political system. But that will come from a hard landing. People say demand change, and that change will only come from what's working. And it's the decentralized technology. So we have the potential. Just the politics is just the most political powers are still hanging on to the past. I see Trump trying to change that, and he's aware. He's trying to make radical changes to the U.S., but it still has to go through its economic winter. Let me. I think he's doing things to make it positive. I'm not going to get into the politics of that, but unfortunately, they have the most expensive stock market in history and the most expensive real estate market in history. He can't stop that. But I like what he's doing to cut the WF funding, focus on resources, but don't stop anything. It goes, let the market decide the prices, and that's all you can do. Right.
I want to ask, I'm going to keep you a little longer than an hour. I know I said it would be an hour, but if you got a couple minutes.
Yeah, I got time. No problem.
Incredible. So there's a couple questions I want to ask and maybe pull on some of these threads. The specific one that I'm thinking of now is, I agree with you actually that we have all the great resources, people, tech here to get this done. And the politics is what's holding us back. I want to know if you think there's a gap, maybe not gap, but a difference pragmatically between people and politics. Because one of the things I've kind of lost hope on, I'll be frank with you, is that as long as it's one vote per person in this country, per adult, the politics are just never going to change. And it's not necessarily the politicians. The politicians are given this bouquet of flowers in terms of the electorate, and the electorate tells them what to do. And as things get more and more difficult for more and more people, thanks to the economic fall and winter, they're going to keep voting for preservation and support and expansion of debt, expansion of leverage, affordability measures, things like that are going to make it worse and worse and worse. I don't know, how you fix that. Because I think that people need to either give their heads a shake, not likely, or we have to do something about the structure of democracy, also not likely. And by the way, neither particularly palatable for a citizen to hear from a potential leader of their nation. So how do you fix that? What is the plan for that? Do you think about that at all? Like, I'm not sure if the model has something to say about that, but the more I see people in destitution, the less I see people willing to accept any pain.
Yeah. Well, the thing is that the politicians, I call them, let's say, ambitious politicians. I've stolen that from Bob Hoy. I love that. Ambitious politicians, thinks that they can direct. All they can do is destroy, and they are the tail end. Remember, politics is the last cycle to affect change. They're not creating the change. They're actually, so people are going along because the financial mania was still inflating. So everything appeared okay. But as that changes, that will force change. So economic winter forces the change because governments are coming to a point with the sovereign debt crisis in the future. The bond market is going to say, sorry, how are you going to pay back things? You don't have the economic growth. I think I posted that chart on GDP. You don't have the economic growth to pay for all this. Mm-hmm. Sorry, we want 8% on our bond yields. What does that do to real estate? What does it do to government spending? Both are retract. So what's done well in the 40 years? The fire sector and government. And rising interest rates will then contract those two. So that's part of decentralization. It's the rise in interest rates that will cause the contraction in the economy and in the government. This is the business cycle. And if you look at that chart, this is a current business cycle. You can see it's slowing. Yeah. And I'm saying this year, it looks like it's going to finally contract. It maybe has contracted, but look at the T-bill market, that leads the Bank of Canada, right? Everybody thinks the Bank of Canada has control. They try to alter that, but ultimately it's the market that drives interest rates.
This is a new, not new, but it's been floating around in the financial world for a long time in the States, particularly that the 2-year leads the Fed rate. I don't know what it is in Canada. What is the duration that leads our rate here?
3 months. I post it regularly. I mean, everybody's asking me, and I said I've got a 100% track record in forecasting interest rates because I learned this again from the masters. All I did, and I think I've said this repeatedly, I didn't discover the cycle. I learned that from Kondratev, then Schumpeter, then from the forum. There were so many brilliant minds, so many books. So I bought, and here's another book on the Kondratev cycle, and I read that. And then as I got better, I said, okay, they're good at the technology, but they're not good at the market. And then I found this gentleman called Martin Pring, who has written all the master books on technology. He had this business cycle theory, mastering the market. And it's like, he had a section in the Longwave. And I was like, are you kidding me? I go, maybe I can make one for Canada. And I loved it. And so I've built a summation of all the best minds, and I acknowledge those people from Martin Pring to Kondratev to Schumpeter to Carletta Perez, who's really good at neo-Schumpeterian, right? And I disagree with her totally about this climate stuff. We have a disagreement. She follows me and I follow her. But I take the best minds, Ray Dalio, and Martin Armstrong. I take all these brilliant minds, put all the things to the model. And with AI, it just allows me to simulate that. And I check everything and make the forecast. So when you look at everything, you realize it's a social cycle and change won't come until you hit economic winter. It's actually necessary, as in death, as in the four seasons. It's a natural cycle. So that's why the Canadian economy continues to slow until we finally get to deleveraging. So what's the solution to debt is more debt. It's kind of laughable. No, the solution is to write down the debt, but nobody wants that to happen. I think part of the solution is when the collapse comes is not to put people on the street, but write down their debt to the level of when they bought the home. So if they put 10% down, now, of course, the banks lose in all this, but I'm just trying to not cause a revolution, right? So if their $1 million home evaporates to 300,000 and they had 10% equity, give them 10% equity, but give them a proportionally 90% leverage at 300,000, which whatever whatever that is,
Yeah,
right?
270 or something. Yeah.
Yeah, about 270. So their new leverage would be 270 and their debt. So it's not that they didn't pay a price, but I'm trying to keep the economy going, and you just can't say, well, let the market decide. Well, you do that, you could have, millions of homes, and that would completely collapse prices. So I think that's part of the solution. And if their solution is just bailing out the banks, which I think they will, which is we learned is a mistake because now they caused another bubble in U.S. We never thought that was going to happen. No, and you don't bail out the public, but you bail out the banks, and people are surprised at the backlash.
There was almost a revolution, right? In a way, it's still amazing to me that they didn't get further in terms of the political traction. Still to this day, you hear people talking about the GFC and how there was really no consequences. A few suits for a few years, and behind bars, and that's about it. And people lost their livelihoods there. They were totally wiped out. And the banks.
They got bonuses, by the way.
There's movies about it, man. Like how many times can people tolerate this? But it just seems like they're so downtrodden. And now, this diet of information people have where everything comes at them 10 seconds at a time, while they're taking a shit or whatever they're doing for news. Like, there's too much for people to remember. And there's also too much for people to look into what's happening to them now. One of the things we talk about on this show a lot, and I'm sure you agree, is that it's not that people don't know something is changing around them. It's that their focus is so acutely on what's in front of them at any given moment. Schools are teaching their kids all kinds of backwards nonsense. They can't afford to put food on the table at the same clip they could before. Their job is not secure. Their parents are not well. They can't find doctors. They can't afford a home. Their mortgage rates are not down where they want them to be, all these things. And so when they're trying to articulate what the problem is, they're pointing to whatever the last suit said on TV. And what are they saying now? It's Trump. Trump is causing us all this pain. Before it was the grocery stores are price gouging us. Before that, it was COVID is causing disruptions. The Russian invasion is causing supply chain. Like, it's all horseshit. It's horseshit. And it's frustrating to me as a millennial, mid-age millennial, I guess, for me, to watch people who I really respected, guys like, older than me, guys I worked with, people I grew up around, just not understand it. They see the problem, they can't articulate it, and instead they look for the easy out and the easy scapegoat. Oh no, did Joe freeze? Maybe he froze. I don't know. That was a good monologue. Can you guys still hear me? I don't know where Joe went. We gotta find out where he went. But it's interesting talking about all these things because the Longwave really is it's an interesting theory of everything. And as a theory of everything, you have a hard time being able to pin down exactly what's going on minute to minute, year to year, month to month. But it's hard to disagree with the stuff Joe says. I'm gonna send him a quick message here. It's hard to disagree with the stuff Joe says. I want to ask him before we drop the criticisms of the Longwave theory and specifically the way that he presents it. If you guys haven't listened to his spaces with Joe Rampart, you should. They do it on Twitter. They stream alongside us on Monday nights, and they go a lot longer than us. So we finish around 8:30. They finish around 10 generally. And one of the criticisms that he gets a lot is, what's the difference between being wrong and being early or mistiming the theory? And Joe is admitting as much in our conversation that sometimes it's hard to pin down the exact time frame, but directionally he's been nothing but correct. And I want to know what he thinks about some of these criticisms because I don't think they're fair. And as Bitcoiners, I mean, you guys know years ago we were calling for 100K Bitcoin and calling for ETFs and calling for all these different things, and everyone laughed at us then. But we saw the writing on the wall. We saw the debt problem. We saw the printing. We saw the lack of ability for governments to control spending. And what did we end up with? We ended up with $110,000 Bitcoin, whatever it's at right now. So there's something to be said about understanding the direction of things, even if you are off by a little bit. Because especially at our age, like you guys know that I'm in my 30s. You guys are probably, if I look at the demo of the show, everyone who listens is basically 20 to 45. You have time. And the opportunity cost of not holding something like Bitcoin or one of these other assets that appreciates over time and grows over time, even if you're wrong about exactly when that next monster move up is coming, that next monster realization for people is coming, you're still going to do well. And, if you look at Joe's theory, Joe's Longwave theory, well, it's actually Kondratiev's Longwave theory, but you get the idea. Timing is important, but it is not everything. So, Joe, you dropped for a second there. I just gave a brief outline of, I want to know your thoughts on the criticisms you've received. You, like I said at the beginning of the show, you take a lot of shit on that Rampart space. And I think for us in Bitcoin, we've taken a lot of the same shit. We said years ago we were going to see 6-figure Bitcoin. We said years ago that government spending was going to continue to rise, interest was going to continue to rise, financialization was going to continue to rise and drive the price of this thing up. What do you have to say to people who dismiss, maybe your interpretation of Longwave and Kitchen's theory and all these things in general because the quote unquote timing is not perfect? Do you have a message for these people?
Yeah. I actually did a whole episode. So let me make it clear. Kondratev never, it says in his original stuff, you can read it, never said it's an exact cycle. It averages 55, 60 years. Why is this longer? One simple reason, up until 71, we were always on some type of gold standard. And it limited the ability of government, central banks, or the banks itself to expand credit. So this has gone on longer. We've said this, I've said this repeatedly, that, even the real estate people were early for 10 years because it went on for another decade. But the thing is, we know that there's a seasons, and how do I know that it exists? Because I'm the worst critic myself. I'm always looking at where am I wrong? And what confirms it is a long-term secular decline and slowing of the GDP. And the more indebted we become, the slower the economic growth. So more debt is not solving it. So when I thought real estate peaked in 2017, and then I said, okay, and then they had the final one in 2020 when I joined Twitter, and I said I was going to go live with it because I was just working in the background with friends. But the first time I went live, and I planned to launch at the top because I wanted people to have a vehicle to help them. I said, okay, how far can they extend real estate? Mm-hmm. And it became obvious it was 2022 or 2024, simply because of demographics. And the blow off came from the interest rates in history, 5,000 years to be exact. And that was the final, and we've never leveraged from the zero bound. No. Let's say that again. There's no precedent regarding leverage from zero. Now, when I went through the 90s, what saved me from bankruptcy, and I couldn't go bankrupt because I was in the financial industry, was interest rates collapsed, so our cash flow. And we had to absorb the losses. So not only did we had to refinance the mortgage, but we had to, our condo fell by 50% when we sold it. We had to get rid of the pain. And the reason why we sold it, just to stop the pain. And we were just both starting our new careers at the time. So it went on longer. And I said, and now everybody said, oh, they could keep extending it. Well, how? And how do you extend it beyond 2025, 24, 25? And I said, this is coming to an end. And the only answer, and which they're working on, is war. And that's part of the long wave. But the problem is inflation. Now we're starting to see that it is impacting the economy. Yeah. So that it's gone on 2 years, 5 years, or 10 years does not disprove the theory. I will say, I hope I'm wrong because I know the economic devastation that's coming. But I'm saying we are so close because the worst of the downturns occur when 3 cycles turn down together. The long wave has been in a down wave since 81, and it just had to build up the debt. So that we finally have had the real estate cycle peak. Remember, the worst is, as Schumpeter said, is the worst of the downturns when you get a business cycle, a Kuznets cycle, which is an 18-year cycle, and the long wave turning down in unison. And they're now all turning down in unison into 2027 to 29. So we're going to see the worst of the economy in about 2 or 3 years, without a doubt. And being right about this is not, it's only personal satisfaction was, I was so ignorant in 89 and I'm so aware today. Mm-hmm. And I wanted not to keep this information. Thank you. I wanted to keep this information public and open to as many as people as possible, so they can benefit from the upwave and the change that's coming. So I get it. It's okay. And people will criticize. But all I know is my followers are increasing on Substack and professionals. Because Joseph, you might be wrong, but follow the model. It is to protect your capital and to do what to do. And it hasn't changed since I've been active. So I was cautious. And one more thing, I was cautious for 2 years. And when we had this big correction, we were fine. It didn't impact our portfolios. But I said, I've got to wait it out. And I got some people say, Joseph, should we be going short? I said, no, wait. And the markets bounced right back up, right? So I said, this is experience that I have regarding what to actually do with the money. Because if you're wrong in finance, you need to admit to it and say, okay. So I've never said it doesn't exist anymore. I said, no, it's just prolonged it by more debt and debt to solve. Japan tried 100-year mortgages and it didn't work. Japan tried everything. And we're going to attempt everything and it won't work. So it's okay. When it's finally right, do I want to be jumping up and down when millions of Canadians are hurting? Of course not. Oh. Right? I want to say, hey, maybe we should pay attention to the social cycle. And so what can we learn from it? I'm going to have a lot of great news for those people, for those new followers. And by the way, I've gone through this personally in 89, in business, managing money in 2000, 2008. My business always did the worst a year before the top because I was risk averse. Mm-hmm. And during the downturn, and I want to tell a story because it's important and you understand what I'm going to tell you. And during the downturn, I did fabulous well. My practice tripled, quadrupled. I did so well because everybody said, hey, this guy knew about it and he preserved our wealth. You should go talk to him. Well, when the first downturn happened, and because I was devastated a decade ago, and I went to a conference, there was other advisors. And they said, man, business is really tough, this market. This was like 2000, 2002. Yeah. And I said, yeah, but I saw it all and I'm doing extremely well. Boy, that was dumb. And everybody was jealous and envious. And I said, ooh. So when 2008 came, 2009, I was like, yeah, really bad. Clients, and I'm, doing extremely well, right? So I get it. It comes with the territory and people are envious. And I said, that's fine. The most important thing is my client base is increasing and I was expanding. I just left because I became disgusted about the corruption in the financial industry, and I didn't want to be blamed for it. And I had no outlet for my clients. I started to help more people this way, and so I finally decided I had to go through life issues in 2020 to get into it, and then officially launch the other stuff. It's to help as many people as possible, because it's like helping somebody go through death. It's inevitable. And there are some people that are helping people, but I can actually be the person that helps them through. And that's the great news, right? Yeah. The potential is there. We just need the system to collapse to start that, because without a financial reset or collapse, you can't start spring. So that's fine. And it comes with the territory and it doesn't bother me at all.
That's good.
Doesn't bother me at all.
I'm glad to hear that, because I want you to keep doing what you're doing. Last question on a lighthearted note. You said something at the beginning of the show that I had to sort of refrain from laughing at. Bitcoiners are so familiar with having like the most boring, annoying probably conversations with their wives about Bitcoin. How was it having a conversation with your wife about why she needs to deleverage? Was that fun? Did you do that over dinner? Did you do that over the course of a few weeks? How was that? People on audio who are listening, Joe's shaking his head.
No, she actually, how we met, and then she heard about, hey, this guy does podcasts. So she said it is the spaces that I did that convinced her. And yeah, there was another aspect which I'm not going to get into. That how do I get her to do that? And it wasn't easy, but she's wise enough to see. And after the sale, and I said, well, look at the price, and I just wanted. So they're not interested, right? And then I've got to admit, it's not their favorite subject. So even where we moved, she said, we're going to buy here. I said, no. And I said, so the only thing I had to do quickly is I show her the data. I said, look at the data. I go, it's already peaked. Oh, okay. Does it make sense to rent? So it's a fair question. Anybody's going to be asking, right? So no, it's not easy. I don't think she's interested. She's curious. She's actually watching tonight. She said she's going to watch it. And that's how it is. I know it's not a popular subject because women and their home and having their own place, even though financially the guys, it makes sense if it drops 50%, but they're renting, they just don't like the idea. And I know it's hard. I know those struggles, and I can sympathize with couples because they want to start a family, they want to have their own home, they want to have the experience. And I get it. I grew up with that, right? I grew up in my parents bought their first home. I was 5 years old, and I have great fond memories of the first house and the second house. So I get that. It's not easy. Not easy.
It is funny though. So maybe your second book you can write on that. It's funny. There's people saying they agree with you. Joe, I gotta tell you, normally these interviews, there's a bunch of half-wit comments rolling in from my chat. There's a couple hundred people watching on all platforms here, Twitter, YouTube, Twitch, all these different places, Rumble. Hardly any comments. People are tuned in. They're locked in listening to the stuff you have to say. So I want to thank you for a very informative and very entertaining hour and change. I put your links in the show notes as always, but tell people where they can find out more about what you're doing, the Longwave. The floor's all yours.
Yeah, thanks for the opportunity, and I appreciate that. I said I've just learned something. I've been given a gift. I love this. I wanted to share and help as many people as possible. And right, so if they want to follow me, I'll be much more active hopefully in a couple of weeks. So it's kind of a relaunch. And for the financial advisors, people are looking for direction regarding the markets. I have a Substack account, and you can see all the links from my website, theeconomiclongwave.com, and there's a Substack account. You can subscribe there, and there is the model, right? The model is updated. So basically what to do with the portfolio. It's there. A lot of financial advisors, private investors, and just people that are curious, subscribe to it. That's the place to go. If you want to be informed, so you can understand it, and AI is helping me simplify it. And Twitter, I try to, with the new revamp on the website, it will be information that we look at, because I'm always looking at it from the long wave, right? Mm-hmm. A bigger picture, what's the impact, versus just scary headlines and home prices dropped another $200,000 today. I try to explain why it's happening, and it was predictable than most people thought. So
yeah,
so
no, totally.
That's where they can find me.
I look forward to speaking with you again. Everyone, thanks for listening. Thanks for watching, and we'll talk to you soon.
Yeah, Joe, and I want to say one last